My name is Leon, and I'm from the Stern FinTech Association. We are a student-run club and currently have 350 members. Outside of the conference, we also organize events and tracks for students interested in the fintech industry. If you'd like to find out more or partner with us, you may do so via our website, nyu.sternfintech.com. Without further ado, let me also introduce our first demo of the day. Matan is the co-founder and CEO of Melio, an accounts payable and receivable solution designed for small US businesses. Before founding Melio, Matan led PayPal's consumer peer-to-peer payments group globally, responsible for over 50 billion in payment volume annually. Matan joined PayPal through an acquisition of his first payments company, the Gift Project, that he co-founded back in 2009, and also which got acquired by eBay Inc. in 2012. Over to you, Matan.
Hey, thanks so much for having me. It's really great to speak at this event, and I wish, like many others, that this would have been in person, but this is the new world for now. So thanks for the opportunity. Excited to be here. Maybe a quick word about myself just before I start. So as mentioned in the introduction, I spent a few years at PayPal before starting Melio, which I'll tell you all about in a second, leading its consumer P2P payments business globally, building apps like the PayPal app that enables friends and family payments, like paying back for coffee or sending money to my family abroad. It was a great experience. Parts of Venmo were also related to my team. But as you know, as I know, consumers around the world shifted from cash to mobile payments. And this digitization that happened between how consumer pays another consumer hasn't really happened in another space called B2B payments, or in other words, how a restaurant owner pays a fish supplier, or how a small legal firm pays its catering service or cleaning service. This world, this B2B world, hasn't digitized yet. It is still very much based on paper invoices, paper checks. There are more than $14 trillion of paper checks that are sent between businesses every year just in the US. It's a crazy number. In the consumer world, there are no more checks. It's either Venmo or Zelle or Square Cash or Venmo or other P2P apps, I guess, that are being used and have become ubiquitous in terms of how someone pays friends and family. So without further ado, I'll share my screen and talk a little bit about how Melio got into B2B. So I'll show like 3-4 quick slides and then jump right to the demo. So Melio is a supplier payments platform designed for small US businesses. As I mentioned, the vast majority of small US businesses are still not using a digital tool called an accounts payable solution to manage their vendor payments. They either use paper checks or the bank's bill pay. That's 97% of small US businesses. And so the obvious question is why? Like, why don't or doesn't a restaurant owner that is using Venmo to pay a friend is still stuffing envelopes and licking stamps when paying its suppliers? Like the same business owner that is using or being very savvy in terms of his consumer payments experiences is still very much behind when managing payments for his or her business. And so the reason that we got to, there are like many reasons for why small businesses still cling to checks, but really the main overarching one is the fact that existing solutions called accounts payable automation solutions, that's the name of the category that is responsible to help small businesses pay their suppliers. This category, accounts payable automation solutions, and the tools and the companies that are part of this category are simply overwhelming for a small business owner. These tools are mostly designed for finance professionals, a CFO, a bookkeeper, an accounting firm, a finance team, but not designed for a wine shop owner that isn't a finance professional, doesn't want to become a finance professional, or an office admin of a dentist that is also making payments for its business, but is definitely not an accountant. And so what we've done with Melio in very simple words is say, let's build an experience, a B2B payments experience, a supplier payments experience that is as simple as Venmo, that you can just sign up and start transacting thousands of dollars, and but still address critical business needs like these bigger, fancier accounts payable solutions. And that's what we've done. We created an experience that is super simple to use, doesn't use a fancy accounting language, so that owner-operator businesses that are 10, 20 people businesses where they cannot afford an internal accountant can actually pay suppliers with ease, but still support various workflows that are so important for a business. The last thing that I'll say, and then I'll jump right to the demo, is that it's not just the simplicity that was lacking for many of these small business owners. It's also an interesting conflict of interests that exists in any B2B transaction. In any B2B transaction, and every B2B transaction, the business buyer has different interests than the business seller. One side, the buyer wants to pay as late as possible. The other side, the seller, wants to get paid as fast as possible. One side wants to pay slow, the other side wants to get paid fast. That's always the case. The interesting thing is that it dictates different payment preferences for each side. So for example, if I'm a restaurant owner, I would love to pay with my American Express card because it will help me defer a payment and gain rewards. However, my supplier, let's say my fish supplier, does not accept cards at all. They only accept a bank transfer or paper check. They don't want to accept a card because they don't want to pay the fee or don't want to go through the setup process. There are various reasons. But today we live in a world, or before Melio, we lived in a world where if my supplier doesn't accept cards, I can't pay with a card. Or if my supplier only accepts a check, I need to pay with a check. And so what Melio did beyond the simplicity is decouple the way buyers pay and suppliers receive so that buyers can pay any way they want with their credit card, let's say, even if the supplier only accepts a check. We charge the buyer in one way and disperse the funds to the supplier in a different way. So that's, I would say, the context for the why we started the company, or the basic hypothesis behind the company. And as opposed to many accounts payable automation solutions that talk about automation, Melio's focus is on cash flow. Automation is something that resonates well with bigger businesses, like with the CFO of Nike that manages tens of thousands of payments, but is less interesting to, a small wine shop owner that has 50 payments or 100 payments. They don't care much about automation. That's why accounts payable automation solutions, again, the name of our category, is less relevant for them. Melio is a simple experience that is helping with cash flow, not with automation. And that's I would say, the focus since day one till today. Now, let me jump to the demo. So this is Melio. You can go to melio.com. This. I'll just minimize the screen here. And you can, the simplest way to pay vendors and contractors, how it works, you easily add a bill, any bill. I'll show you how it works. Then you choose to pay with a card or bank transfer, and then the vendor gets a check or direct deposit to their bank. As simple as that. Let me sign up just very quickly to show you how simple this is. So I'll use just a test account here. I'll sign up. First thing that I'm doing is verifying my email. It's not just a way for us to validate whether the user is real. We're already in the background understanding whether this user is a fraudster or not. We have AI and machine learning algorithms that we've developed internally to evaluate each user that signs up. Because when you don't have a sales team that calls every customer and you just let people sign up, you also attract a lot of fraudsters. So here's the onboarding process. What type of company am I with? I'm a business owner. Entering a few basic details. My name is Matan Bar. Let's enter a fake phone number. The name of my company. Let's say Melio. Our address. By the way, everything is responsive. So here, this is how it looks on mobile. This is how it looks on desktop. A quick question about my bill activity, and I'm done. As simple as that. I'm registered, and now I'm in the dashboard. Super simple dashboard that lets me add, there's an inbox for my open bills, scheduled for payments that I've already made, and paid payments. So if I add the new bill, I have three options. I can add the bill manually, just enter manually. I can upload a PDF file, which we read automatically, or I can pull bills that I've already added to my accounting software, to QuickBooks, to save me manual entry. Let's say that I add a simple, an example bill. I'm paying NYU supplier $500. Bill number 123. The due date is the 25th, and I'm done. That's it. I have my bill in my inbox. And now the next step, and by the way, on mobile, it looks like this. So this is how it looks like. Just like a very simple, almost like an email client, just a simple list of bills. And on mobile, by the way, a fourth option is added to scan a bill using my phone. It disappears when I go on desktop. But let's say that I'm going to pay my bill. NYU supplier, schedule this bill payment. Now, the first question that I'm being asked is, how do I want to pay? I want to pay with a credit card or bank account. And I can choose how I want to pay. And the next question would be how my supplier like the payment to be delivered. So let me just switch to an existing user real quick so that you can see. Let's do this. All right, so this is just an existing user. I have a bill here that a bill for a supplier called Let Go Green for $500. Now I'm scheduling this bill payment. And here you can see I've already linked a few funding sources. I've linked my Bank of America, I've linked my MasterCard, and I've linked my American Express card. And now I can choose to pay, let's say, with my MasterCard. The next question is, when would I like this payment to be deducted? No one wants to pay early or pay late. I want to pay in a timely manner. And so let's say that I'll pay on the 17th. And here I'm paying with my credit card. Let Go Green, my supplier, will receive a bank transfer. They do not accept cards. And so in this case, I, as the buyer, I'm enabled to pay with my credit card, gain the rewards, defer the payment until my next credit card bill, which helps my cash flow. And I will pay a 2.9% fee for using my credit card. If I would have chosen to pay with my Bank of America checking account, then the transaction would be free. You can see here, it takes in the US 3 business days for an ACH transaction to arrive. So if I pay on the 17th, the supplier will see the funds either on, let's say, on the 22nd max, but we also support same-day delivery, where we take risk, but deliver the payments faster, which is also helping the business's cash flow. So when we deliver a bank transfer faster, the buyer can keep cash longer. And that's also another feature which helps with cash flow to the buyer. But let's say that I'll just choose the regular free option. And here in this example, I'm paying from my bank account. The vendor receives a bank transfer, and now I'm not paying any fee. But with Melio, when you pay with the bank, we don't charge anything, like Venmo, like PayPal, like Zelle. But when you choose to pay with a credit card, then we charge you 2.9%. When you want to pay with a credit card to smooth any financial volatility that you might have. Or this is just an example bill, so I won't be able to do that. Let me choose another funding source, and now it would work. So again, paying with my credit card, the vendor will receive a bank transfer, and I'm done. So payment scheduled, and that's it. Now the payment will be deducted at the date that I've set, and I'll obviously get the notification. As simple as that. Now, the difference between this, and I'll end with that, but the difference between a Venmo payment flow and a B2B payment flow is that in the background, there are many features that enable a workflow. A B2B payment is more than just a payment. It is a workflow. When I use Venmo, I add a pizza emoji and I'm done. With a B2B payment context, there are many things that happen before the transaction and after the transaction. This is a list of just a few of the things, but whether it's automatically capturing the bill details, syncing with your QuickBooks accounting software, doing tax reporting, managing some collaboration flows between, let's say, the office admin and the dentist, where if there's a certain amount that the admin cannot pay by himself or herself, then the dentist would need to approve the payment through our platform. There are various workflows that we need to support, which makes it, again, very different than Venmo. But the trick and the key thing here is to try and aim to always keep the simplicity of a consumer P2P experience. That's it in terms of the demo. I'll just say, just to end the demo, I talked about how we're different in the accounts payable automation solution space. We always joke about it that even the name of our space is overwhelming. Accounts payable automation solution. Accounts payable is an accounting term, and automation is a value that doesn't resonate with small businesses. Melio's mission from day one was to keep small business in business with simple B2B payments that maximize cash flow and minimize busy work. And it resonated with a very underserved market called the small business owner market that had a very difficult year. And we are very grateful to be in a position that was able to actually assist these small business owners to start managing their finances remotely and their payments remotely, more specifically. Thank you very much. Great to be here. And feel free to follow up in case you have any questions. Thank you very much.
Thank you, Matan. I agree. Small businesses are truly the lifeblood of our economy. So let me introduce our next speaker, Darion Miller. Darion Miller is the Senior Director of Product for Bank and Platform at Stash. Stash is a personal finance app that makes investing easy and affordable for millions of Americans. Darion began his career in sales, selling service management software to plumbers and electricians. Then he was at HubSpot, where he was one of the original 100 employees. A self-taught engineer, Darion then owned and operated a digital agency where he worked with brands like Walmart, Pay, Play, and dozens more. Over to you, Darion.
Thanks so much. And I know I speak for a number of people that are speaking today. A number of us were actually going to speak last year. I'm really thankful for NYU FinTech for continuing and persevering during these times and getting this back up and running. And thank you for having us and hosting. I'm just going to get right into it and share my screen. So today I'm going to be talking a little bit about our stockback card and our newly launched feature in beta. In addition to that, for our roundups feature that complements this. You may have heard about stockback in a previous panel. Claudia was mentioning this. I'm going to dig a little bit deeper into the benefits and why we offer this to our users. But first, I want to talk about this blank slide for a second. I think when a lot of people look at a blank slate or something as new, they get really excited. A lot of people look at this as a lot of uncertainty, fear. Starting something new is very difficult, especially when you're talking about finance and people's money. About 50% of Americans are in a space where they don't have any securities or are they not invested into the market. And a lot of that comes from a sense of fear, a sense of not knowing anything about the market itself. The recent events have proven that volatility and created a little bit of fear as well. When we look at this slide and reflect on it for a second, it allows us to be grounded in that, we may all on this call know what finance is, but a lot of the people that we are servicing have no idea even where to start. But I think the common thread here that everyone has in common is that we all spend. We spend on credit cards and cash, and those types of things have been around forever. And I'm going to talk a little bit about how we've actually broken down that barrier for enabling people to take a simple activity that they already do today, spending, to get them introduced to the market. So first, a little bit about Stash. Stash is a personal finance app that you may have heard about. We originally founded about 5 years ago in New York City. We have proud New York City roots. And our mission here is to make investing easy and affordable and we've done that to 5 million Americans. Stash helps the middle class invest. We're not looking to service the 1%. And build wealth by combining 3 key benefits on our platform: simplicity, affordability, and flexibility. And I'm going to talk about one of those features today. So first, why did we build this? Ingrained in our ethos at Stash is education, auto investing, and diversification. This particular feature bridges that gap between investing and banking, something that has never really been done before. We were one of the first people to actually take the leap into bridging that gap. So for auto investing, we really preach long-term investing, getting people acclimated to the market, having a continuous behavior of actually investing, dollar cost averaging, and that's ingrained throughout our application. You can see that with our Learn and our Ask Stash, and we have a plethora of other tools that users can use, like our diversification score and our newly launched smart portfolio that actually kicked off launch yesterday. Also in that is education. With the Stockback card itself, it introduces people that may be apprehensive at first into the market, to give them a sense of what McDonald's stock is, how does it perform, what is a PE ratio, with 0 risk. Everyone that creates an account at Stash has the ability to load up some money on their card, and the stock rewards come as they spend in their regular everyday spend. Diversification is at the core of this as well. We're helping our users automatically create and understand the importance of a diversified portfolio. You don't want to put all of your eggs in one basket. We've seen even in the most recent events what that looks like. And by allowing users to diversify by spending, going to McDonald's and Walmart and just every day where they spend, they get a sense of what the diversification can look like in a balanced portfolio and brands that they like or places that they shop. So before I get into demo, I just want to show a little bit of our timeline here. So in December of 2018, we launched our banking product, and pretty much immediately after that, we launched our Stockback program. It's really fun. It was a really fun feature to build because pretty much everyone in the company, including Brandon, our CEO, and Ed, the president, got involved in helping us match stocks, to transactional and MCC codes. There was no automated process at the time. We were manually doing this like in an Excel sheet. So it was really fun to get in there and get your hands dirty. In May, we actually hit 1 million rewards. So in a span of about 6 months, 1 million rewards happened. We've experimented a lot. I would say in the course of about the year or so that it's been out, we've probably launched around 50 different tests and including new features and things like that. In May 2020, we hit 10,000 rewards. And then finally, we launched our Stockback Roundups program, which I'll touch on a little bit. And then we added custom stocks, the ability for users to choose and override different stocks to match their investments and to continue to add to other stocks in their portfolio. So just introducing the Stockback card. There are 2 core main features, the Stockback rewards and the Stockback card itself. And what's really awesome about this is it's instant. So as you're shopping, you get a push notification. When you open that push notification, it will take you into the app so that you can see what that latest purchase looks like and how much stock you're actually going to get. What's really fun about this, and I'll talk about it in a second, is there is a lot of instant gratification that comes with this. You spent at Walmart, you get a piece of Walmart stock, you take a look at it. Oh, what's the stock up to today? Great. I'm going to actually add a couple dollars to this because I feel good about where Walmart is today, or even if it's an unknown brand that you didn't know. So again, getting users acclimated with brands that they're unfamiliar with, but that are public and giving them little pieces to track. So to talk a little bit about where we're at today with the stock rewards. So we have 22 custom investments that are on the platform, but you get stock in every publicly traded company on our platform as we've matched it. We've given away 22.5 million stock rewards, encompassing about 357,000 users who've received this. As it is today, we have about 200 matched merchants. And as our data integrity increases, we're able to match more and more, to our platform. Sorry. So what does that look like? So as a user, when I get a push notification and I take a look at that, I can actually look at the stock that I received, look at its performance, and then I'm taken directly in there if I wanted to add more. So again, going back to the core of what we're trying to do here, we're trying to introduce some education benefit to the user for something they're already doing, they're already spending. And this flow actually shows how quick it is. Within 30 seconds of a transaction, a user can actually, get a piece of the stock rewards that they've earned, and then purchase a stock within 30 seconds. One of the features that we're really excited about that's in beta at the moment is our stockback roundups feature. So to date, we've had 71,000 users with stockback roundups on. As we slowly roll it out. This is organic adoption. We really haven't marketed as much, or it's not very prominent in the app as we're still trying to figure out and get feedback from our users, how to position this feature. But we've allowed $580,000 in investments that otherwise wouldn't have been invested. That's getting roundup in addition to the stockback rewards. So you can see here on the left what that visual looks like for a user as they break it down. So if I'm a user and I just purchased something at Walmart for $56.72, I'll round that up. I'll get 28 cents in roundups. That's coming from my account. And in addition to that, Stash is granting 7 cents in Walmart stock to that user. So you can see, again, this is a simple activity that a user is already taking advantage of, and they're being rewarded for that, and they're adding a little bit more on top of that to grow their portfolio. So what does that look like? It's really simple. This particular feature is just one button. So if you would like to take advantage of the automation tools within Stockback, you simply click on it. You can open it up and enroll. In addition to other things that we've added on the platform, like stockback roundups, we also have bonuses that are themed generally to the month or something going on in the world. So you can see here in these particular bonuses, they're specific to coffee, and there's one for Disney. These are additional multipliers added on to the original stockback grant. And that's it. All I had for demos. If there's any questions, happy to take them. Otherwise, again, thank you so much for allowing me to present, and I look forward to next year.
Oh, thank you so much, Darion. Up next, we have Arash Asady. Arash Asady is the co-founder and CEO of Bits of Stock. Bits of Stock is a consumer rewards platform that drives loyalty through stock rewards, fractional shares of private and publicly listed companies. Arash began his career as a US Marine Corps intelligence operator and then transitioned to Wall Street as a global fixed income and rates trader at leading banks. He holds an MBA from NYU and a Master's of International Affairs from Columbia University. Arash, please.
Great. Thank you for the introduction. I'm going to go ahead and share my screen. 1 second. There we go. Perfect. And greetings from Dubai. Really excited to be here to pitch Bits of Stock tonight. So again, my name is Arash Asady. I'm the CEO and co-founder of Bits of Stock, the stock rewards app. And we're a consumer rewards platform that drives loyalty through fractional ownership of public and private companies. But today, I'm not going to talk too much about Bits of Stock as a product. There will be a product demo at the end. But I'd really like to talk to you more about the big picture of what is Bits of Stock and what is the underlying problem that we're trying to address and where we see the future of what we call an ownership economy. So first, I'm going to start with wealth inequality and the ownership economy. I'll briefly touch on stock rewards and consumer spending and some insights from proprietary data. Then I'd like to introduce this ownership concept of shared values, and we'll end with a quick demo on Bits of Stock and the stock rewards app. So for us, wealth inequality has always been the issue we're trying to address. We think that the next 10 years will be a momentous decade for people to unite and come together and change the way we look at wealth inequality. And Bits of Stock we want to be the center of that. When you look at wealth inequality, and I know that everyone in this audience, it's nothing new for you, but the gap means that the world's richest 1% have more than twice as much wealth as nearly 7 billion people. And while half of humanity is still living less than $5.50 a day. And it's also disproportionately affecting women. So inequality is sexist too. With less income and fewer assets than men, women make up the greatest proportion of the world's poorest households, and that proportion is growing. And as we start to connect the dots, when you look at that gender as well, they're much more underinvested. And so addressing that issue can also address the sexist issue of wealth inequality as well. So what we have, our concept of addressing wealth inequality is the path to what we call an ownership economy. So we believe that addressing this extreme gap is not just a political choice. So when you look at the way governments have dealt with this issues in the past and still are, some of the ways have been ineffective. So if you think about it, only 4 cents in every dollar of tax revenue comes from taxes on wealth, while the ultra wealthy avoid as much as 30% of their tax liability. So the real focus should be on long-term wealth. There is a need for a paradigm shift in the way equity and wealth is redistributed, and not just as the government as the main focus of that distribution, but also focusing on the economic relationship between customers and corporations. And that is how we lead a path to an ownership economy. And that is the focus for us at Bits of Stock. So an ownership economy to us is the key to tackling wealth inequality in the long run. So we believe that all consumers should be owners in the economy they participate in. We drive the economy, and we should get something back that gives us long-term wealth and gives us ownership and participation. And this problem is only getting worse. So it's getting worse, but it's also getting worse with younger generations. So if you look at up to 80% of the global population under the age of 34 do not own any long-term wealth, which, as we all know, is the only path to financial security and retirement over time. So when you look at the ratio of income to wealth, it does tell a story. So $30 trillion in financial and non-financial assets will pass down in the next few years to come. And actually, that will change every 5 years. 10% of the total wealth in the U.S. will change hands. And so when we look at this as a ratio of income to wealth, the problem is even more profound. And it's also getting worse for younger and younger generations. So I'd like to take this from Scott Galloway in one of his recent blog posts, when he mentions that since 1989, people under the age of 40 have seen their wealth plummet. So for the first time in U.S. history, young people are no longer better off than their parents were at the same age. So the problem is becoming worse, and it's disproportionately affecting different demographics and age groups of our global population. So we've heard a few topics on stock rewards already. So our vision of stock rewards is a path to an ownership economy. And as I mentioned, an ownership economy is an economy where all consumers should be owners in the economy they participate in. So how do we see stock rewards? Well, we know that we've seen publicly listed stock rewards, so fractional shares in global publicly listed companies. But it doesn't stop there. The economy is not just publicly listed companies. So fractional ownership in private companies is what we worked for as well at Bits of Stock. And we're currently doing this in Europe. We work with brands and retailers in Europe, private companies that offer shares as loyalty programs to their customers. And these types of rewards are win-win rewards. So consumers are rewarded with ownership for shopping with brands. And that creates a long-term economic relationship between brands and the consumers. And why are they win-win rewards? So stock rewards are the rewards that keep on giving. They can pay dividends, but they help younger generations build wealth while remaining loyal to their favorite brands. And really, for the brands themselves, there's two types of incentives for brands to give back ownership to their consumers. They're financial incentives and emotional incentives as well. So on the financial incentives, there are a few different topics that are important for brands to note. So long-term incentives, stock reward holders hold their stocks and they hold their positions much longer. Also, consumer spending. Stock rewards lead to a 40% increase in weekly spend for most consumers. And also brand preference. So preference for spending with brands that goes beyond a consumption experience. So as a marketer, how do I create an experience that goes beyond transactional marketing through transactions? And this was a paper actually released by Columbia University recently that studied the effect of stock ownership and individual spending and loyalty. And at Bits of Stock, we've rewarded over 2 million transactions, and we've collected our own data, and we're looking at ways to show how this impact leads to changes in consumer behavior. And we see already really positive impact on basket size, frequency of transactions, and ultimately brand preference. But there, as I mentioned, there's the emotional incentives as well. So we'd like to look at what one of the former CEO of Starbucks, Howard Schultz, he once famously said, if people believe they share values with a company, they will stay loyal to that brand. And it's a very powerful message. And we at Bits of Stock take it one step further and we say, what if your customers not only shared your values, but they actually own them as well? So how do you turn your values into something that your customers can own? And that is what an ownership community is, an ownership community part of an ownership economy. What we're essentially doing is democratizing ownership based on shared values. And so when you create an ownership community, you're building a community based on ownership and values, shared values. We speak to a lot of brands who already have strong communities or looking to build communities, and they see stock rewards as a great way to actually bring those communities closer together or bring them together based on shared values. And ownership of values. When you look at younger generations, brand values become more important with millennials who give attention to brands with purpose. And Gen Z will actually hold brands accountable for their values today. So for the younger generations that want brands to really represent their values and stand up for what they believe in, ownership is a great vehicle for them to be active and become activists. And that's what we mean by don't just talk the talk, walk the walk. So if you want to hold your brands accountable for the values that they preach and the values that you share with them, taking ownership in a brand and its values is how we can hold brands accountable as well. And there's quite a few use cases for stock rewards. Again, stock rewards being fractional shares and ownership of private and publicly listed companies. So as we talked a little bit about today, brand loyalty, but also employee loyalty. So why not retain employees? But go beyond the traditional methods of stock options and grant programs where you can actually reward your employees with micro interactions and with micro stock rewards. So building employee loyalty over a long run with everyday transactions and card loyalty as well. So with the Bits of Stock app, you don't need to open up a Bits of Stock credit card or debit card. You can actually connect any bank account, any card that you have, and as many as you like as well. So we also offer a way for card issuers and banks to offer a differentiated user experience and a way for their cards to stay top of wallet and top of mind by offering stock rewards to their consumers. And as I mentioned, we've collected transaction data and with our own app to analyze the impact of consumer behavior when people are rewarded with stock rewards. So we're really excited to announce our research collaboration with New York University's very own Arun Sundarajan to explore the impact of stock rewards and on consumer behavior. So we're looking at the impact that we can have on consumer behavior and what is the value that's brought to shareholders who are loyal to the brands that they shop with. And we're really excited to start this collaboration over the next few months and hopefully over the next few years. And lastly, I'd like to just leave you with a product demo of the app itself so you can have a better idea of how it works. Again, my name is Arash Asady. I'm CEO and co-founder of Bits of Stock, the stock rewards app. Feel free to email me anytime, arash@bitsofstock.com. You can download our app from the App Store. And I look forward to hearing all your questions and collaborating with NYU for further research on this project. Thank you for your time.
Okay, that was amazing. I don't know about you, but I've worked up an appetite traveling between academia and the commercial world, and between big companies in the fintech world and small ones, and around our community, where you've already seen the fantastic people involved in fintech in and around NYU. So we're going to break for lunch now, and we'll return to this conference at 12:15, exactly just about an hour from now. If you signed up for a table topic, you'll sign off this call and sign on to your custom Zoom link for your specific table topic. And please come back to this webinar at 12:15, which will open at 12:05. So we have an amazing afternoon ahead. We have more startups, more academic research on artificial intelligence, an expert panel on B2B fintech, and we have a fantastic ending keynote between our business school dean and one of the leading fintech VCs. So have a great lunch and see you at 12:15.